Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, December 18th, 2020. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. You'll notice how strong the market has risen here since the lows here early in October. The market has rallied through the top of the key range here, which is the 35.87 key level. We've mentioned before that as long as price remains above that level, we continue to push higher. A failure to hold that level could rotate prices back down, perhaps as low as 3,400. But so far, the market has been defended by bulls at the PEMA trigger zone, the rising PEMA trigger zone here, and has continued to rotate higher to new highs. So this uptrend remains intact, and so far we continue to work toward that 37.81.5 target up above. That's the 50% extension from the key range. We're looking for that to be hit here by the end of the year, as long as price continues to step higher off this PEMA trigger zone. For the most part, what we're looking for here is range-bound action with an upward bias right now, especially in the back half of December, where volatility comes down, volume comes down. You tend to see range-bound action as it continues to drift quietly higher. So we're looking for more upside price action here. If there's a failure to hold 3,700, that could open up a bit more weakness down below, but even then any pullback could still be a buying opportunity for continuation higher. Alright, let's take a look now at the NQ. You'll see here the NQ remains very bullish as well. As a matter of fact, from the lows of the week here and from the lows of last week, the NQ has trended steadily higher at a pace that is blistering right now. Very, very bullish and steep trend to the NQ right now. It has pushed through all-time highs. It is holding above the 12,646 FOMC key level and remains on a path to see 12,900 very soon. Again, we were looking at a potential push to the extensions of this range. If we start pushing through the top here, which is 12,465, you start to open up these two targets that could be reached by the end of the year again. This market remains very, very bullish. It has gotten a breakout from this multi-month range here and has retested the breakout point. So again, all signs continue to point higher. All pullbacks continue to be defended until proven otherwise. Let's take a look now at crude oil. You'll see with crude oil, this one here currently developing an inside day right now, very narrow price action, 36% of ADR, just 43 ticks of range. It remains within a very bullish uptrending phase here. The PEMA trigger zone continues to be bid. We might be at a cycle high and could see a little bit of a pullback, but any pullback again below that 8-period average could be a buying opportunity for a continuation higher. We talked about the 10-period average here that developed last week. We got a big breakout, a retest with a failed new low, and it has slingshot prices higher. So for the most part, we're still looking for a continuation toward 49 to 50, with the potential to see even more beyond that until proven otherwise. This trend remains very, very bullish, and right now it appears to be releasing that 10-period energy to the upside, and we could still see more upside into the 50s ahead. Lastly, let's take a look here at gold futures. This one finally had a major break back above the 1874.20s and back above the 1800 level. Those two levels there have been significant, and what we've seen here now on that breakout is perhaps a bit of a transition phase back into the upper market structure we talked about before. If price can continue to hold 1874 to 1880 on the pullback, that could open up a move across the range into 1960, perhaps as high as 1981.70. So overall, this has been a big break to the upside. We had coiled up like this and broke to the upside. 1859.40 is the FOMC key level. Any return into that level could still be defended for a continuation. So right now, we are seeing strength higher. We have seen two significant rotations up with one higher low here, and for the most part, all bounces have been hard sold since the August highs. So this one has been very difficult to get going to the upside and keep a lasting move. So this is very, very bullish right now, the way it has played higher off of the 200-day, back above the key range low. Again, even if we were to see a little bit of a pullback, it could continue this thing into the upper end of this zone. So continue to watch 1870 to 1880 as support for gold futures. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Happy Friday, everyone. Have a fantastic weekend. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.